Definitely. For sure. Good day. Good day. Oh, are you in a golf cart, Ashley?
Yes, that's what I was like.
But yes, my husband is driving,
I
so
knew you were on a
that's
golf
why.
course, but now
Yeah.
I see the roof moving.
Right, right.
Mm. Well, thank you everyone for being a part of this journey of helping to change your life with real estate. For those agents who are in the room and you have invited those people that you know that are looking to sell, to purchase, to become investors and amplify their life with the things that we hold so dear to our heart as we're out in the real estate streets and teaching people how to prepare and stay focused in their journey to purchase, sell, or invest in real estate. Thank you for showing up, whatever phase or stage that you are here. We want to also thank those who will be watching this on replay and YouTube University to know that we are an extension of this temporary relationship that will be forged as we assist you with their real estate goals. And I want to take a moment to have everyone briefly introduce themselves. I will go with Hakeem first. How are you doing, Hakeem? Share a little bit about you. The mic is yours.
Doing great. Thank you. Thank you for joining me. Very excited to be here this afternoon and be a part of the largest virtual home buyer seminar going on in the country right now. We are hosting this event so that we can bring to you the steps to home ownership. So my name is Hakeem Herring, your real estate partner. Been in this business over 23 years and a wealth of knowledge. We have a team of real estate professionals who are going to share, who's going to deep dive into the home buying process. And we also have Paul, our lender, on the line as well, who's going to join us and go through the ins and outs of the mortgage process and the financing process. So I'm happy to be here and thank you everyone for joining in.
Thank you. Thank you so much. I think I didn't introduce myself. I am Makeba. My foundation of my business is in Metro Atlanta, but as many of us, global real estate is what we are claiming because we can assist you in all 50 states. That is the bonus of being in a room with Mr. Paul Conti, is he can take care of you in all 50 states. And the relationships that we have forged in our collective, one of our real estate professionals will be able to help you with that goal as well. John, the microphone is yours.
Hello, everybody. I just want to drive home a point. When I got into this real estate business, interest rates were 16%. That was a long time ago. So don't let something like interest rates stop you from moving forward. This is a perfect opportunity to get into your home and start creating that wealth that you're looking forward to. But you can't do it sitting on the sidelines.
Definitely. Thank you for sharing that. Wow. John, how long has that been? I mean,
That was like 2 weeks ago. They were
right,
16%, weren't
exactly.
they, John? It was like, it wasn't too long ago.
About 30 years.
There we go, Mrs. Scran. We see you in these real estate streets. Thank you. Thank you for showing up. Monifa.
Good afternoon, everyone. Glad to see you. Glad to see you all here. My name is Monifa Taylor, and I've been in the real estate business for 23 plus years also. And I'm happy to be here to share some information that I have with you on the home buying process. And I know this will be a great informational session for you, so stay tuned.
Thank
And
you.
I'm complete.
Nisi.
Hi, everyone. My name is Christina Nisi Mathis. I hail from the Atlanta metro area. I am a VA not loan specialist, but VA specialist when it comes down to home buying and home selling. I'm an investor specialist, and I've actually only been in business since February of this year. Got my license on Valentine's Day. That was my gift to myself. Yay. But very, very on fire and excited, and I'm glad to be a part of this. And I know that you will leave with very valuable information.
Thank you. We appreciate you coming to command the stage with us. Vanessa.
Hi, everyone. My name is Vanessa Kelly. I am a native of South Georgia, but I've been in Atlanta for the past 15 years. Newly licensed, but I have an extensive background in marketing and just a really great understanding of the Atlanta market. So excited to be here with y'all, and let's get into some properties.
All right. Ashley, we already know where you at, girl. Got that visor on. You on the green, honey. It's your birthday. Please share.
Yes, yes, yes. Thank you so much, Ashley Perry. I've been a licensed realtor for over 15 years. I work alongside my husband, who's been a licensed realtor for over 20 years. So we make up the Backus Investment Group. He focuses on helping people who are looking to fix up houses and looking to improve them so they can get them on the market a lot faster. And me, of course, being the strategic side of things, I specialize in taxation. So I'm an enrolled agent representing folks in front of the IRS and sometimes fixing some of those things. So we'll talk about that in a little while. And then also, I am a financial advisor. So sometimes people just, they don't know what to do. Like, should I sell? Should I buy? Is this financially the right time for that? So together we are a nice tag team. So, so glad to be here to share all this great information with everyone, especially on my birthday weekend. Where else would I rather be?
Yes. Yes. Thank you. Thank you. Carmelita, I know you were on your magic carpet, babe. Did you make it to your destination?
I am at my front door. I'm getting ready to walk. Hi, everybody. I am Carmelita Collier. I have been in real estate for 24 years, and I hail in the Atlanta area, the metro area. And I just welcome you guys to this phenomenal webinar. You're going to get so much information. So we can't wait to get started and share with you all of the goodness. And I'm walking in my door.
Got you. Got you. All right. Well, please get your apparatuses, your pen and paper, however it is that you are going to take notes. This is also going to be recorded and it will be on YouTube University. If you have any questions, write those down, put them in the chat. We will definitely take care of making sure that you get those answered between 3 and 3:30. We are respecting your time, so we are going to go ahead and officially begin our presentation. Let me find, there we go. Okay, hold on. Ta-da! Well, welcome everybody to this journey of home ownership. We have 7 stages that we're going to be sharing with you. Whether you are a homeowner currently needing to sell your home to purchase your next home, your journey could be one of a first-time home buyer or an investor looking for creative financing. So this is definitely the space in the room to be in to get all of those questions answered. And we are thankful that you are trusting us to assist you in this journey. Well, thank you so much, Ashley. There we go. Thank you. I had some technical difficulties over here. Ashley, the stage is yours.
No problem. So, like I said, I have a finance background, and the number one thing that I speak to all my clients about is understanding their financial situation, knowing what your budget is. And that is your income, how much you have saved, whether that's in your personal savings, also any employer savings that you may have, a 401k, a 403b, knowing what that looks like, but also knowing those expenses. So there's a lot of apps out there. We're not going to go through them all, but knowing what your expenses looks like. So that actually can feed into the type of home you need and how much you can afford. Because another big portion of this is that we're going to talk about debt to income ratio. And when we talk about your debt, it's really what is on your annual credit report. So making sure that everyone is going through, pulling their free annual credit report from annualcreditreport.com, knowing what your debt is, how much you owe per month, and comparing that to your income. Now, most of these mortgage companies and loan officers, they're going to be looking for your tax return. So make sure that you're comparing that to either your pay stub or what you have on your bank statements each and every single month. But also, let's try to keep that under 43% of what your debt to income ratio is. The next part of it is, of course, because you have that annualcreditreport.com, you also want to check your credit score. So typically 620 and above is right where you want to be for most conventional loans. Of course, the higher the better. The higher you go, the better rates that you can get. And of course, just getting overall pre-approval is going to be the place to be. Now, we all want to get you into a home with the lowest down payment possible, but still you want some skin in the game. So when we talk about savings, you all need to be prepared with at least 3 to 20% of the home's purchase price, right? And if you're under 20%, you're going to have to pay something called mortgage insurance. And I know that our loan officer is going to be talking a little bit more about that here soon. So the more you can have saved towards this journey, the better off that you're going to be. So now that you know where you are financially, if we go over into step 2, we're going to talk about getting you pre-approved for that mortgage. And so why get pre-approved? Well, it shows that you're serious about this journey, right? It also gives you a clear understanding of what you can and can't afford. There is nothing more heartbreaking than going to see the home of your dreams only to find out that you can't afford it or that you can't be approved for it, right? And so let's talk about approvals a little bit, right? There's pre-approval and there's pre-qualification. So pre-approval is when your loan officer has done a thorough review with your credit check and your financial documentation, and they're saying, hey, this person's good to go. I have everything that I need to know about them. Now, pre-qualification is really just an estimate. It's kind of based on all the information that you've told your loan officer, but it hasn't really been verified. You always want to go for the pre-approval, and you always want to be on that safe side. Now, looking at the different mortgage types, the first one is a fixed rate mortgage, and that's going to be consistent payments over a consistent term. So most of us know there's a typical 30-year term, 20-year term, 15-year term, and of course you can work in different years and terms throughout that, but that's pretty much making the same payment to the bank over the remainder of what you consider that term. Now, there are adjustable rate mortgages that are making their heads and coming back and running towards us. And so, with those adjustable rates, that's saying something like, hey, you may have a fixed rate for, let's say, 5 years. And after 5 years, your rate may adjust up or down. We all want it to go down, of course. But hey, you have to be prepared for reality that your rate may go up after that term. So just be aware if you do get an adjustable rate mortgage, that rate may go up or down. So definitely be careful with that. Now, also looking at different types of government-backed loans, we know that we have FHA loans, which give buyers the ability to put less down than what we normally would with a conventional loan. Also, it has more favorable terms for people who may be a little credit challenged. So FHA is a great way to go. VA loans, I know I come from a veteran family, so a lot of my family has used VA loans and their 0% down program. And then USDA loans. So if you're looking to buy in a more rural area, you may also want to consider some USDA loans. And now I know our mortgage loan officer who's going to be talking to you a lot more about some of these programs, but until then, we just want you to get comfortable with what that mortgage payment is going to look like. Plug them into a mortgage calculator. There are plenty out there. All of your realtors here can definitely connect you with a preferred mortgage calculator so that you can know what you're really stepping into and figure out what you're going to be comfortable with. And so, with that said, I'm going to turn it over to Vanessa, who's going to talk about finding your dream home.
That's amazing info. Thank you, Ashley. So, hi, everyone. Again, I'm Vanessa Kelly. Let's talk about finding your dream home. When it comes to this process, clarity is everything. This step is about defining what you need today and anticipating what you'll need tomorrow. When you're defining your needs, start with the big picture. Where you live impacts your daily life. think about commute times, school districts, and neighborhood amenities, and be honest with yourself. For example, I know I'm not one for a long commute. Buying a home that adds an hour to my daily drive or one that's too far from my family who supports me with childcare would diminish my quality of life, no matter how good the deal looks. Um, Next, focus on size. How many bedrooms and bathrooms do you need? What kind of space will truly work for your lifestyle? Be flexible on square footage. A well planned, smaller home can live better than a larger one with a poor layout. Finally, think long term. Will this home meet your needs 5 to 10 years from now as life changes? Right? Some house hunting tips. The process can feel overwhelming, so work with a realtor who really understands your goals. Again, be honest with them about what you're thinking and what you need. Use online listings as a filter, not the final destination, to save time. And don't rush. Touring multiple homes will give you perspective, and often the right property reveals itself only after you've compared a few. Uh, did we lose our slides?
One sec, we're having some technical
Yes,
difficulties.
it's
So one second. But continue on to explain a little bit more about
Sure.
this
Yeah, but I was going to
process.
keep going. So, as far as that goes, finding your dream home isn't just about falling in love with a property. It's about making sure it fits your lifestyle now and into the future. While we wait for the slides to come up, I'm going to go ahead and talk a little bit about making an offer. Once you've found the right home, the next step is going to be putting together a strong offer that balances what you want with what's realistic in today's market. Realistic in today's market. Some components of your offer will be the offer price. The offer price should be guided by market value, the home's condition, the home that you're looking at, its condition, and recent comparable sales, not just what you feel like paying. Your realtor will provide the data and recommend a price range, but ultimately, the decision on what you offer is yours. Contingencies act as a safety net. They let you exit the deal if financing, inspections, or appraisals reveal issues. Earnest money, usually between 1 to 3%. We're on step 4. Here we go. So you guys can see here, I'm not going to go back, but we are talking contingencies. So, no, we're talking earnest money. I'm sorry. Earnest money is usually between 1 to 3% of the sale of the price, and it shows the seller that you're serious. Again, you're earnest about it. That's where that earnest money comes from. And then setting a proposed timeline helps both sides know when closing and move-in would happen. We're going to talk negotiation strategies. Be aware that rarely does the first offer get accepted outright as is. Expect counter offers. If you are a seller, you might have the buyer in their process request repairs or credits after the inspection. If you're a buyer, you might be requesting repairs or credits after you have your inspection done. And then either side might need that timeline adjusted. So these are things that are not abnormal. Your deal is not completely falling apart if these things start happening. This is part of the process. Think of negotiations as a back and forth designed to land on a win-win. Both sides are looking for a win here. Making an offer is both an art and a strategy. It's about protecting your interest while creating something that the seller can reasonably accept. Having a realtor by your side means you have a knowledgeable support system to guide you through every step. Okay. With that, I am going to turn it over to Monifa to take us into step 5. You're on mute, friend.
Thank you. Thank you. I started talking and everything. All right. So we are on step 5 of this home buying process, and that is home inspections and appraisals. So with home inspections, this is something that you definitely want to do before making a purchase. This is just like anything that you buy. You can equate it to different things that you purchase, but you would not go into, I don't know, let's say a restaurant and you see mold on the food, I don't think you would be purchasing it or eating it at that time. But at the same time, there are some things that are negotiable. So if you go to the restaurant and they don't have chicken today, but they have beef, you're like, oh, I'll take a beef burger instead of a turkey burger. And so that's kind of like a little negotiation that you can do to for a happy medium. So this is something that's similar in the home inspection process. You will go and make sure that the home is safe and sound. So it's safe from safety issues and safe from health issues. Those are two things that are fundamentally issues that you want to make sure that the property is standardly safe. So with the inspector who you will hire, they will come to the property and look for all the issues that you may have in the property, all the things that may be right and may be wrong. They're going to tell you about different things in the property, such as HVAC systems, water systems, things like that, the major systems that are in your house. So they're going to tell you whether they are functional or not. And with that report that you get from them, once they're finished, you will take that and go over that with your realtor. And so you can request repairs to be made. So you will send over a form to the seller saying, these are the list of repairs that we would like you to make adjustments so that we would feel comfortable in the house. Sometimes they will make those repairs. Other times they will negotiate reduction of price so that you can make them yourself. Sometimes that works better because you can choose your own contractor and things like that to make repairs. But ultimately, you all want to come to a final decision where everyone is comfortable with the decision that they make to purchase the house. Sometimes there may be an issue where there's just too many repairs for your comfort, and you may say, you know what, this is not the house for me, and move on. So the inspections are usually anywhere from $300 to $500. That is just a price you have to pay to make your decision. Sometimes, decisions, these type of things cost. They have upfront costs for you, and then you can make the decision to move forward or not. And these are some of the things you have to do. So the next thing that you do is an appraisal. So the appraisal is for the lender and yourself as well. You want to make sure that the home is at a price, or you are purchasing the home at a price that is the same value as others in the neighborhood. So there's a professional that comes out and they will base your house on the houses that sold recently in the neighborhood. And that will tell the lender whether or not what you made your offer for is this value that your property is worth. So the lender is not going to lend you more money than the house is worth. So if everyone around you, if you look at a 4-bedroom house and everyone around you has a similar floor plan, and those houses are going for $350,000, and you just love this house so much, and you put an offer for $380,000, the lender will say, oh, we're only going to lend you $350,000 because that's what everything is going for in this neighborhood. So you have to decide whether you're going to pay the difference, whether the seller is going to come down, or some kind of happy medium in that case. So that's something that is another thing that is negotiated during this time. And so those are two things that you have to consider when purchasing your house, is the inspections and the appraisals. Once you do that, we can move on to the next step, which is closing the deal. So, we all know that when you have a large contract, you want to make sure that you have the major issues taken care of, and you want to know what you're going into before you sign on the dotted line for your property. So 3 things that we want to make sure that we have before we go into the closing is you want to have your final terms and your interest rate. So you want to know exactly what's going to happen. You get that information within 3 days of closing, so you're not surprised at the closing table like, oh my goodness, what is this? because sometimes things fluctuate and change. Sometimes the taxes are different than they told you at the beginning, so that makes your payments a little different. So you want to make sure those things are finalized. Then you have your monthly payment breakdown, which is what I just explained. That's all involved. And then your closing costs and fees. So closing costs and fees are things that the lender charges. You also have your attorney fees, you have your realtor fees. All those fees are going to be on the documentation that you have for your final document, so you know ahead of time what to expect to bring to closing. Then the next thing is your final walkthrough. So this is something that you do either the day of the closing or the day before closing, very, very close to closing time, so that you'll know that the house that you looked at when you first found it and the house that you looked at when the inspection was done is the same house that you are buying, with very minimal differences, except for maybe the repairs that you requested. So you're going through to find out if they did the repairs that were requested, and also that your house wasn't in some kind of major damage or anything like that, so you can move forward with the property. If there are any issues where you requested repairs and they agreed to do those repairs and the repairs were not done, then those are things that you can go over with your real estate agent to rectify. There's sometimes different things that can be suggested to you for before closing, whether they do it at closing, prior to closing, pay money for it, or you decide to take off, different things like that. So you'll have to discuss that with your agent in the future. And then you'll move on to signing day. And that's when you will be able to finally sign your documents for closing. You have your down payment, you have your closing costs, you bring your ID and your funds, and you will be ready to close. And I am complete. On to John.
Well, congratulations. You got through that buying process and you've opened the doors to your new home. Now, there are a few things to handle on the back end of this. You want to make sure you change your locks, set up your security systems, and update your smoke detectors. Also, transfer or establish electricity, water, gas, internet, all of your utilities, and trash collection. And update your address. You want to notify the USPS, that's United States Postal Service. Go to the DMV and have your address changed on your driver license. Notify your employers, your banks, and whatever subscription services of your move. Finally, store important documents like your deed, title insurance, and home warranty in a secure location for future reference. Once again, congratulations, and I'm handing it off to Carmelita Carter.
Great job, everybody. So that was an amazing, amazing presentation to the home buyer experience, right? But we have some final tips for you to be successful. Know your budget, don't skip the inspection, plan for your future, and most importantly, stay calm. You're going to be guided by real estate professionals, your lender professionals, your home inspection professionals. They're here to help you, they're your partners. We're quarterbacking your experience so that you can get across the goal line. That is what we're going to do. So, thank you guys so much for listening to the presentation. I am going to bring up an amazing, amazing partner of ours, Mr. Paul Cunty. If you would come off mute and just give everybody a hand clap and a woohoo, and get ready to hear from Mr. Paul and get ready to have an experience that you will never forget.
Woohoo! Yes. Oh my goodness.
So cool.
Loving it.
Great job, gang. Great job. Love it. Thank you again. What a beautiful, blessed opportunity I have to meet with all of you today. I took some notes as I do every single time. So you all did a great job. And I want to share some pretty cool things that you guys brought up later in my presentation, which is exceptionally relevant to today. So I'll share that with you. Great job, gang. So let me first start by sharing this with you. By the way, if any of you have questions, I'm a guy. I can only do one thing at a time. I cannot see the chat and talk to you at the same time. So bear with me if I'm delayed in getting back to any questions, but you can always raise a hand and stop me because I tend to get a little excited and talk fast. So I'll do my best to slow it down. Here's where I want to start. Circumstances beyond my control have no control over me. This goes to John's point. 30 years in the business, interest rate 16%. Man, listen again. Circumstances beyond my control have no control over me. Here's what I'm referencing: the government, the politicians, the media, all that stuff that they're sending through what? They're giving us all this fear to manipulate, and it's coming through the television. They're telling us what to think, what not to do, gang, listen, if it doesn't align with you, then you shouldn't be giving it much attention. Think about that. And now let's slow that down with the government, the politicians coming through the television. Think about this, slow it down. Television. They are telling us their vision. What? That doesn't align with my vision. So why would I be fearful about home ownership or interest rates or anything based on what you're telling me? You don't align with me. So think about that for a second. We're bringing that into our household. Never release your future, your authority, to somebody else, especially when you consider the source. And I'm not saying anything against their government. We need them. I love them. Listen, they're only lying when they're talking. So I'm not saying to you, don't listen to, I'm trying to put in perspective. What I'm going to share with you guys today has nothing to do with what's going on because you're in control, nobody else. I prefer, instead of fear to manipulate, I want to bring cheer, enthusiasm, excitement to educate and to empower, to give you all the tools necessary to grow your business as agents and to become homeowners as current, maybe renters. You're in control, not me and not anybody else. But what I will do is share with you what's needed in order to take that next step. With that being considered, let's talk about this for a second. How about we start with making this decision? If you had to make a choice and I told you to answer this question, who is more important to you, your landlord or you? It's not a sarcastic question. I'm being serious. If your landlord is more important to you, put L in the chat. Man, there better not be a single L popping up in that chat unless it's your mother or father. That might be another story. But I want you to think about this. Think about the statement, because I'm going to ask you to prove it. You got to prove it. Paulie, I'm more important than my landlord. You are? Then why every single month is the money leaving your pocket and investing in his financial future? Listen, gang, as a renter or an owner, money leaves your pocket for a mortgage payment. You're either investing in his financial future or you're investing in yours. So if you actually said, I'm more important than my landlord, then now's the chance to prove it. And I'm going to give you all the tools to do exactly that. So think about that for a second. Let that settle in for a second. It doesn't mean renting is good or bad. It doesn't mean home ownership is good or bad. That is for you to interpret. My job is to give you the tools and the path. Let that settle in. Here's the thought process. If you don't change it, you've chosen it. There are 3 simple factors to becoming a homeowner. I'll make it real clear. If you're making your rent payment, you can make a mortgage payment. Well, what's the confusion? Well, see, there is a difference. The reason there's a difference is because it's up here. We need to mentally prepare ourselves for home ownership. It's a bigger deal than renting. Not in a bad way. It's the next step. Are we ready to make that next step? Did we say landlord or did we say me, right? So if we're going to go back to that, we got to prove it. So what are those 3 steps? It's so simple, right? So think about it this way. Has anybody here ever gone to the doctor and had blood work taken? Just by a show of hand. Anybody ever give blood work? Nope. Every hand should have gone. My goodness gracious. All right. So we've all had that experience. We've all given blood, whether it's for a sickness or a checkup. I want you to think about this for a second. You would not attempt to self-medicate until you got the results of the blood work and sat with your doctor. Paulie, you got this. We got cholesterol. Here's what we need to do to fix that, to get that better, to eradicate that. Paulie, this is what we need to do. You wouldn't try and do something before you actually knew What needed attention? The reason I share that with you is because credit is the first thing we're going to talk about. Credit. The reason this is important is because credit is just like going to the doctor to get blood work. You should be doing it for your financial health. If it makes sense to you. If you're not concerned about your financial health, don't get it. If you're not concerned about your physical health, never get blood work. You're in charge, not me, right? You're in control. But if that means something to you, then that would be the next step. So what does credit look like and why is that important? Well, as the credit doctor, I'm going to look at that, the health of the credit, and give you an education, guide you. What needs to be done, if anything, where you need to be in order to buy a home, et cetera. Gang, I got news for you. If you qualify to get into a rental, it's the same thing for a mortgage. It's really not much different. You did a rental application, you made enough money, they did a credit check, you can move in. It's the same thing. It's the same thing. So don't be fearful of that. Be encouraged by that because you're already doing it. You're already doing it. The challenge is you didn't have anybody tell you that you were actually more important than your landlord, but you know that now. So we're going to make that next step. Now, here's what I need everybody to grasp. There are two versions of credit. There's a system called Vantage. There's a system called FICO. You don't need to know this stuff, but I want to educate you because a lot of consumers are driven to something called Credit Karma and other credit systems. They're wonderful systems in and of themselves. Here's the challenge. They use a system called Vantage. Guess what mortgage companies use? FICO. So the challenge is with some consumers on this call and or future buyers or agents, we're logging into that and we think, Paulie, I got a 700 score. Where did you get that? Credit Karma. It's not real, gang. It's not real. It's real for their system and their purposes, but you can't buy a home with it. It's not a bad thing. It's a wonderful system. But the scoring model is not the model mortgage companies use. So the idea now is, okay, now that I know that, I'm subscribing to these systems and they're giving me information, letting me know when credit is pulled, a collection, something popped up. I get it. They're wonderful for that. But you want to come to the credit doctor, and I'm not saying you need any type of health check. You just need to have this thing checked. We need to know what to do and what not to do, if anything. And I'm going to give you a very basic example. My children, when they all turned 18, Paulie, you have kids that were 18, you look like you're 35. Thank you so much for saying that, Makeba. But I'm not, I'm a little bit older. But my point to you is this. When all of my children turned 18, they had 750 credit scores. Now the scoring ranges from 0 to 850. 0 to 850. To get over 800, you've been doing credit for a while. You paid all your bills on time, and it usually takes many years. And my children had 750 when they turned 18. I'm going to teach you exactly how to do what I did for my kids that you can do for yourself in a moment. So I now had to take a look at that credit and say, ooh, let's jockey this around a little bit. Let's play a little chess, if you will. And let me help you get your credit in a position to help you acquire your first, second, third, fourth home. It's simple. So I'm going to teach you all the ins and outs of that. You need to go to the credit doctor. We take a look at that together and we review that together. Does anybody have a question about that initial statement that I've shared with you? Nothing. We're good. Credit scores. Let's talk about that. 0 means you have nothing. Nothing reports. You've got nothing established. There's nothing there to talk about. 850 means, oh my gosh, you're like the best credit person on the planet. You can get money, access to money anywhere for anything. And then there's a range in between. What does it take in order to get a mortgage, Paulie? What credit score under the FICO model do I need in order to acquire a home? Generally speaking, gang, you want to have a credit score north of 580. This is a generally speaking comment, north of 580. There are some lending models that go as low as 550, and VA doesn't really take into consideration your score. VA looks at the picture, the package, the overall, what's going on here. So I don't want you to think if you don't have a 780 credit score, you can't get a home. That's absolutely incorrect. Now, keep in mind, whatever your score is, it doesn't matter. because the credit doctor he's on staff now. You push a button. I'm going to tell you exactly what to do. I know what to do, when to do it, how to do it to get the score to move to get to a point where it needs to be. Now, let's take a look at this. Someone that has a 580 credit score might have different loan programs, and someone has a 780 credit score might have access to more loan programs. That's obvious, the higher the score with anything. So keep that in mind, please. It doesn't mean you're a bad person. Bad things happen to good people all the time. Don't worry about that. We'll walk through this together. That's the important piece of this. I don't look for you to self-medicate and say, well, I'm going to pay off some bills. Wait, why would you do that? Here's a little tickler for you. I have a collection, Paulie. I need to pay that off before I get started with the mortgage process. Hold it. Don't do that. Why would you do that? Because I want to pay my bills. It's the right thing to do. I'm not saying it's not the right thing to do. However, if you've got a collection on your credit that's older than 2 years old, don't touch it. As soon as you touch it, you reactivated the timeline. It's now going to count against you for the next 2 years. Let it sit dormant. Don't touch it. Not many people know that because they want to do the honorable thing. I'm not telling you be dishonorable. I'm saying if this is your theoretical hurdle, let me help you get past it. Don't touch it. Paulie, I got a charge off from a credit card. I got to pay that off. Don't touch it. Who told you to do that? My mom, my dad, my brother, someone on the internet. Don't touch it. There are some lending programs that don't care about charge-offs. They don't even count against you. So why would you touch it? You're reactivating bad debt and you start the clock over again. Staying clear, gang. This is why I say, please don't self-medicate. Let me do this with you. Questions or thoughts? Okay, so now let's talk about, Paulie, how did your kids at 18 have a 750 credit score? Here's some tips for you. I have a cheat sheet. Cheat sheet. It's how I got through school. I have a cheat sheet. Tough crowd here, Makeba. I have a cheat sheet of all the things I can give to you that will help you move your credit. I'm going to share a few examples with you now. My children were all added to my credit cards as authorized users reporting to credit. That means the credit card I've been paying for 10 years now populates on my son's credit report. No detriment to me, only the positive benefits of a 10-year history going on his report. I did that with all of my children, gave them 3 or 4 credit cards. They all became co-signers. Scores are through the roof. It helped them establish their own credit, and then I pulled mine back off. They don't have charging authority. They didn't get credit cards. They're just getting the advantage of daddy's good pay history. You do not need to be related to anyone to do that. It can be your best friend. It can be your buyer, your seller, your cousin, your neighbor. Anybody can do that for anybody. It's as simple as picking up the phone and saying, Capital One, I would like to add my best friend to my credit card as an authorized user reporting to credit. Will you do that? Yes, we will. Great. Name, social, date of birth, address, boom. 30, 60 days later, your good pay history populated to your best friend, or vice versa, gang. Do not give them a credit card. Do not give them access. It's a very simple process. Everybody can do that. Next one. If you have the financial ability to do this, you are approved for $1,000 on your credit card. Keep your balance under $200 or 20%. If you can keep it lower, keep it lower. And I'll tell you what I do. I have a credit card. The reporting date to the credit bureau, very important. This Capital One, I'm not endorsed by them. They don't pay me. I just keep using them. I see the commercial all the time, so they brainwash me. It's working, Capital One. And I have a Capital One credit card. Capital One. For the sake of this example, they report to credit on the 15th. Here's what I do. I have a zero balance all the way up until the 13th. And then I charge a tank of gas, $50. I let the $50 report to credit. 2 days later, I pay it off. We're playing the game, gang. I only wanted to report to credit the lowest possible amount. Paulie, let it report zero. No, don't let it report zero. Why? Isn't that a good thing? No. Who told you that? I read it on the internet, so it must be true. Stop doing that. That's why you come to this call. The credit algorithm magic wants to see how you manage debt. If it says zero, you're not managing anything. If it says $50 on a $1,000 credit card, wow, this guy's in total control. He's managing the debt well. I only let the 50 report, then I pay it off so I don't get charged any interest. If you have the financial means to do that, do that. There's another quick tip. Credit cards have the ability to have more power in moving your credit score than fixed payments, car, mortgage. Here's why. The car payment's the same every month. But that credit card, boy, that could shoot up. Look at this. They went to the track. They went to the casinos. Now they owe 10 grand. The payment's $800. Holy smokes. That throws the system into chaos. So they carry more weight. We use the credit cards to manipulate the score. So there's a beautiful couple tips for you, gang.
Definitely. Thank you, Paulie.
Also, Netflix, utility bills, they should be reporting to credit. I didn't know that. I know. That's why the credit doctor's here. You do now. And I got the cheat sheet. So when you call me and say, Paulie, you're the man. Can you please send me the cheat sheet? I'll send you the cheat sheet. And all you got to do is click on the blue tabs. It'll take you right to the site and teach you exactly how to get those things reporting to credit. Simple. Now, let me say this. If you haven't been paying your Netflix on time, don't get it reported to credit. I want to make that disclaimer quite clear. And here's a really big one for everybody on this call. Your rental payments should be reporting to credit. And I got news for you. When you sign up with the right app, they'll go 2 years back and populate that history. Gang, we're talking about, I've seen movement 40 to 80 points in a score. Paulie, I want to pay this debt down. Has your rent been reported? No. Have you paid on time? Yeah. Ooh, let's just do that. The heck with that collection. Just get that to report, gang. Let's get on mom and dad's credit cards, couple authorized users. Let's see if mom and dad got about $800 to give you right now. Why would they give me $800? Because you're trying to put their grandkids in a home. Use that as leverage. Come on, mom and dad, you don't want your grandkids in a rental. Can you help me get them in a home? I need $800 to pay down my credit card to get it under $50, so my score drops 20 points. Come on, gang. It's a team effort. We could do this together. If my kids came to me and I had the financial means and they need a little help, I would do it. Why wouldn't I? I asked for help when I was younger.
Absolutely.
So there's a whole bunch of things there that we can do together as a team to put you in a credit position to never have anybody say, no, you're not qualified. By the way, I never say that. Vanessa, Lisa, and other agents on this call have had me on calls with their buyers. I never say no to anybody. It's always yes. Sometimes it's yes when, but it's never no. Never no. We need hope. We need encouragement. We need education. We need the tools. Hope stands for hearing other people's experiences. That's why you come to a call like this. Collectively with this team and what I'm sharing with you, you're getting the experiences. I'm not in as long as John. Sounds like prison. I'm not in as long as John. I'm only in since 97. John's got a little bit of time on me. But my goodness, can you imagine tapping into 20 plus years, 40 years of collective mortgage and real estate experience? You got the right team. And you're getting this kind of information to excite you about that, because this guy is not important, more important than this guy. And I'm fixing that today. Questions or thoughts about credit?
We don't have any in the chat, but just
I
now
do have
I can
one.
tell that people are taking notes, John.
I do
Yes,
have one.
definitely.
Excellent.
At what age can a person begin to put a child on their account as an authorized user?
Boy, John, that's a great question, my friend. And I don't know the exact answer because I've heard varying reports. Maybe what I can do is I can go to the credit reporting agencies myself directly, get that information factually, and bring it to the next call. I've always said 18, but I heard it can happen sooner. So I don't want to speak out of turn because I don't know it factually, but I'll get it for our next call. Great question, John. I knew the 30-year vet would throw me a curveball. Come on. What?
Okay. And then we have in the chat Netflix. People are like, really? I can get my Netflix timely payment reflected on my credit? That's a great
Yes.
nugget.
Gang, Netflix, cell phone, utility bills, all of that can be reported to credit. So when I tell people, okay, you have a choice, we take a look at the credit. And I'm making this up for the sake of example. You got a 620 credit score. I want it to be higher. Wait, you're approved. Let's go buy a house. Let's acquire your first piece of real estate. Let's do it together. Yeah, but I want to get it 20 points higher because I want to beat my brother. Okay, we can do that. Instead of trying to use money to pay things off or down, which I never encourage to pay something off, but again, looking at the complexity of the blood work, the whole credit report, we come together to figure out what is the best path for you. Sometimes it could mean just adding 3 or 4 things, not taking anything off. But I got to look at it first to know. So it'd be unfair of me to say this is exactly what you should be doing. I'm giving you generalities. We get specific when I look at your blood work, when I look at your credit report. So yes, all of that can be reported to credit. The rent is the biggest one. That's a beautiful one. People are not aware. And the beautiful thing about rent is they can go back 2 years and add 2 years of timely payments. Whew, that's gold right there, gang. That's gold. So now let's take a look at the next thing. Job. This is an interesting one. I'm going to give you generalities. You should have a job. You need a job, and you got income coming to the household. In parentheses, with a big asterisk, you don't need to have a job. You don't need to have income. Like, what is he even talking about? I'm going to give you generalities. Yes, I'm looking to, and I think, Ashley did a great job saying, here's the debt ratios. These are the things that you need to qualify with. And then Paulie's getting on and saying, wait, you don't even need to have that debt ratio, Schmidt ratio. We don't need one. What? How's that possible? When I look at your situation, and Vanessa, I was very blessed with having an opportunity to speak with one of Vanessa's buyers recently, who is an investor with multiple investment properties, and his wife, who is newly self-employed. And somebody would say, well, you need 2 years of tax returns. Who told you that? I saw it on the internet. Stop. Go into the internet. You don't need that. You don't need that. The general rule of thumb, I am working. I have income. And then what we do is this. We take a look at your blood work, your credit. We take a look at your income. And then we come up with a formula that says, based on these factors, here is where the budget for you will fall. So let's get with your partner, your agent. Every professional home buyer has an agent, just like a professional actor. They got an agent. You're a professional home buyer. You got an agent. I go to my agent and we say, as a team, here's what we're looking at. Great. Let's go find that together. It's an effort, gang. Now, Paulie, what if I'm not showing enough income for the house that I really want to buy? Boy, there's a whole list of things that we can do. I'm going to tickle you with a few. You want to buy a home, and on paper meaning the credit and the income you provided, the formulation on paper, that home is a little higher than the price point you can currently manage. However, do we have mom, dad, aunt, uncle, brother, cousin, sister that is willing to come on the loan as a non-occupant co-borrower? We don't want to live with mom. We just want to use her for her credit and income. Maybe some of you do want to live with mom. I'm giving you an example. They need to be blood related in some capacity, and they can sign on as a non-occupant co-borrower. We then add their income and look at their credit, and that could increase your ability to get the home you want to get to. Now, here's another one, really cool. Kids in college, 23 years old, hungry, aspiring, wants to buy a home. He's in college. Doesn't matter. Mom, dad, aunt, uncle, brother, cousin, sister can co-sign, and that person who's unemployed working at college can buy a home with a non-occupant co-borrower. Now, if you want them to be an occupant, if you want them to live with you, that's fine too. Nothing wrong with that. I'm just giving you an example. Wait, I'm not even working. I can't possibly buy a house. Yes, you can. Mom, dad, aunt, uncle, brother, cousin, sister, are they willing to jump on with you? Wonderful. I'm self-employed. I don't show any money. Gang, I tell people this all the time. You got a couple choices. You can either beat the government or you can beat the mortgage company. You just can't beat them at the same time. Pick which one you want to beat. Now, when we look at the math together, most of the time it makes sense to write your income down so you don't have to pay the government all the taxes. But that could have an impact on you on paper, income qualifying for the house you want. So then what do we do with that? Well, we don't have to look at your income. We might just look at your deposits that are going into your bank statement. And we take a 12-month average of what's been deposited, and we declare that as your income. You qualify. But wait, I wrote all this stuff off. We don't want to know. We only want to look at what's being deposited in the bank statement. How cool is that? Wait, I don't even want to show you that because I did some things I'm not too proud of. I don't want to see your bank statements. That's okay. How about we just get a letter from your CPA? It's called a profit and loss statement. Your CPA drafts a P&L. There's the income. We'll take it. What? Yeah. Yeah. We also can say the heck with all that. I don't want to show you bank statements. I don't like my accountant. How about I just show you an investment account that I have? I got $1 million in that account. I don't want to touch it. It's doing great. Can I just use that as leverage? Yep. You can just show us the asset statement. We then come up with a formulation and declare an income based on that asset statement. Go buy a house, my man. Isn't that wonderful? Or you can say, Paulie, I don't want to show you nothing because I just don't feel like it. No problem. If your credit score is high enough, you can buy a home and show me nothing. It just requires a little bit more of a down payment. So we're not going to get stuck doing what we did in 2007, 8, 9, where you could buy a house with a 500 credit score and not prove any income. We got in trouble with that one. So this time around, they said, all right, we'll do the same thing. We just want a higher credit score and we want a bigger down payment. So if they can do those two things, they can buy a house and not prove anything. So when I go back to this and I say job, I should put an asterisk next to it. Maybe, depending on what it is that you're bringing to the table. And collectively as a team, when I say team, I'm referring to your agent. You are a professional homeowner or you're a professional agent. You need the right board members on your team. So you got the lender, I'm right here. You got your agent. Let's get together and talk about this. Team effort. You're not doing this alone. Why would you want to? So there are the examples about a job. Any questions about that? Nothing. Let's go to money. Money. You got to have a little bit. And sometimes I don't care how you get it. And here's what I mean when I say that. With some loan programs, they want to see your asset statement. The asset statement could be the bank statement, 401k, mutual funds, retirement account. That's what we refer to as an asset statement, not your watch collection, not your car collection. That doesn't mean anything. Asset money, stuff like that. So we look at that and we say, okay, for the sake of simple math, which I'm going to show you in a minute, because I believe Monifa has a home that is for sale that we're going to be using as an example for everybody to show you how simple it is to buy that home. You better call Monifa because it'll be gone after I do this talk. The idea is, okay, I need, based on your calculation, Paulie, 8 grand, 10 grand, 12 grand. That's what I need to buy that home. Yes. Do you have it in your bank account? I do. Wonderful. Give us that bank statement, all pages. Let's check it out. Great. You got it. Go. Or, no, I don't have it. Can you get it? What does that mean? Well, I'm Italian. So is there anything in the shed? Is there anything in the mattress? I'm kidding. Not really. I'm telling, listen, can you get the money? Can you get the money? Can we get it from mom, dad, aunt, uncle, brother, cousin, sister? Can you sell a watch, a jewelry, your engagement ring? Because the wedding's off. Can you sell something? Can we sell something and show proof? Here's how I got the money. Great. Wonderful. Or it was like a big cash deposit that you took from the mattress and you put in the bank. We don't want to see that because we don't like a cash deposit. So let that money sit in the bank for at least 30 days. Mm-hmm. And then when we see the new bank statement, we don't see the cash deposit. Bingo. Come on now.
Mattress money.
You don't even have to be Italian to have it. So there are several things when I share this with you. There are so many asterisks next to this because generally speaking, if you go to someone that might not have this level of knowledge or the internet, they're going to give you the canned responses in order to achieve home ownership. That's why I say, who are you to tell me what I can and can't do? I just got off the phone with Makeba's team and Paulie. I can become a homeowner. You're daggone right you can. You just need the right team and you need the right education in order to how to accomplish that. It is actually very simple. And I go back to the concept of if you're paying rent, you're paying a mortgage. It's the same thing. And then I bring us all the way back to this. You now have the tools to prove it that you are more important than your landlord. So the next steps from here, gang, generally speaking, you want to communicate with me because I will take a look at the credit doctor looking at the blood work. That's step one. We talked before. It doesn't make sense to self-medicate. We agree. We don't even know what's right or wrong. And now after learning some of the things he told me, I better be careful. And I got news for you. You may have talked to somebody before. If they have not lived up to this level of standard, they're in the past. They're in the past. So we move forward. Now I take a look at the credit. Here's how simple it works. I shoot you a text. Your agent and you will be on the text together with my mortgage team. I send you a mortgage link. You fill out the mortgage link. Within 24 to 48 hours, we're back on the phone. Let's take a look at this credit and income together. And as I mentioned before, we go over everything I just shared with you. If there is nothing to provide other than you're approved, let's go acquire our first home, our second home, our next investment property. Let's go. Let's go. I'll share these two stories with you, but that's the next step. I'll give you my phone number in the chat. You call me, you text me, Paulie, I got a buyer, hurry up. Lisa brought me a buyer by the grace of God that she was told one thing by another lender. I'm like, it doesn't mean the lender was bad or wrong. They just don't know what I know. And Lisa affirmed in the buyer firm, she was so grateful and thankful that she saw what she needed to see that inspired her to now become a homeowner. Am I right or wrong, Lisa?
Yes, absolutely.
Was it a good call, Darwin? Did we have fun?
It was amazing, and she was very grateful.
What a blessing,
Yes.
right? So I'm very thankful for that. So that is the next step. And I'll put my phone number up. Some of you could text me, Paulie, I saw you speak on the home buying seminar. I'm ready. Let's go. Boom. I'll give you a call. We'll have a little chit chat, and then I'll connect you with my team, and we'll get the process rolling. I'll share this with you based on a couple of the comments that were made earlier. John mentioned being on the sidelines, and Carmelita mentioned something about quarterbacking. So if we're making a football reference, let me run with this one for you. Here's my thought process. Holy, the interest rates are so high. I don't want to buy now. I want to wait until they come down. Okay. I don't know if that's a great idea or not, but let me ask you this question. Football. Do you understand the concept of football? Whether you watch it or not, gang, most people understand the concept of football. Here's what I say to everybody. 6 foot tall, 225 pound, out of shape Paulie Conti can score a touchdown in the NFL today. You better watch that game. I can score a touchdown today. Here's how. The ball's on the 50-yard line, which means it's in the middle of the field. Both teams are on the sidelines. And Paulie jumps on the field, grabs the ball, and runs it into the end zone. Yeah, baby. I did that. You can do it too. Oh, wait a second. Both teams were on the sidelines. You know what they were waiting for? They were waiting for the referee to blow the whistle and say, play ball. Oh, Lord, I'm going to get killed now. Now I get crushed. I'm not going to make it but 5 yards. I'm going to get killed. We're waiting for the referee. We're waiting for the government to blow the whistle and say the interest rates are now 3%. Okay, everybody, play ball. Oh, my, I'm dead. I'm dead. I'm dead. They're going to kill me. Because if you're the seller and you waited for the government to say play ball or the interest rates are now 3%, instead of having 2 people come to your open house, you got 100. Because now 100 more people can qualify at 3% than they could at 7. You know what you're going to do as a seller? You're going to keep increasing that price.
Mm-hmm.
Because now the interest rate's at 3%. Gotcha. So now you just jack that house up 30, 40, 50, 60, 80, 100 grand, which I have seen in my 20-year plus experience. And you know what? You're paying the same price at 3% than you would have at 7 because you just spent 50 grand more. You know who the intelligent player is? The guy or the girl that says, that makes sense. Everybody's on the sideline. Great. Yes, that makes sense. So now I probably have more negotiation leverage because I can go grab that ball, the house, because I'm the only one knocking on the door. And that seller's more inclined to want to talk to me because he looked around the corner. He's like, there's nobody else in line. I guess we're going to work with this lady or this guy. I guess we got to negotiate down. But if you wait for the government to say, play ball, interest rates are now 3%, you're going to learn what negotiating up means.
Right.
As agents, as buyers, an intelligent buyer understands the concept and says, it makes more sense to play ball when nobody else is playing. Because even that fat dago can score a touchdown when nobody's playing. But if I wait like everybody else and they blow the whistle, I'm not going to be able to compete. Gang, a stat was put out last month. 85% of current renters re-up their lease. It is the highest number in history. Here's what I believe. They're paying attention to the wrong team. They're listening to the propaganda and the fear that's being pumped through that television into your family room. And when you hear something like this, and we talk like this, and you're then given the numbers, you are invigorated, you are empowered, and you are inspired to go and achieve what you want to achieve for your family. And I'm going to show you exactly how easy this is. Makeba, could you pull up that house that Manifa has for sale?
I sure will. And of course, the propaganda that you are speaking about, why they have us distracted over here on the left, they are the ones purchasing the properties at the prime time.
You better preach.
Yeah. I know we need them. I haven't figured out what for yet, but I know we need them. And remember, they're only lying if they're talking. So now let's talk to you about this home that Manifa has for sale. Here's the real world numbers, gang. We're going to walk through it together. Purchase price, $269,900. These are the factors that generate a monthly mortgage payment. They are called principal and interest. Combined principal and interest. It's a factor that when you plug in a loan amount with an interest rate and a term of a mortgage like a 30-year term, it populates something called principal and interest. That's the principal and interest on this purchase. Real estate taxes. Every single month, real estate taxes are paid because you are now a homeowner, and some of those taxes are going to schools, roads, trash, etc. Your landlord pays that now, but in the rental payment you're making, he takes some of that money and makes the real estate tax payment. $450 on this home. Unless I'm wrong, Manifa. Home insurance. You have renter's insurance, you have automobile insurance, you might have life insurance, disability insurance, umbrella insurance. You'll now have home insurance. I'm estimating $100 a month to protect the home. Next one, mortgage insurance. Approximately $120 on this purchase price. Mortgage insurance. So the monthly mortgage payment, $23.24. Gang, the average rental payment is like $2,600. What are we doing? What are we doing? Here's how you figure out, holy, on paper, will I qualify for that home? You can do the math because I'm going to teach it to you right now. 2324 divided by 0.45% equals your monthly gross income. You need to be earning that monthly in order to qualify for that. Does that make sense, gang? And if you want to double check my math, then what you do is this. You take 5146 and you multiply that by 45%, and it's going to give you that, or thereabout, depending whether or not your calculator rounds up. 45% is right around the maximum mortgage payments you can qualify on with that income. I can go into the entire book and verse of underwriting guidelines. I'll bore the heck out of you. Nobody wants to hear that. I don't care how the burger's made. Just give me the burger. There it is. I just taught you the math.
Exactly. And the difference from putting all of our energy and effort behind paying the mortgage of our landlord is the opportunity when it's time to purchase that there are different programs that people can qualify for to help purchase the house. So that's definitely going to be something very important when they get that one-on-one conversation with you to see where that location is going to be for them.
Yes, ma'am. And for a general rule of thumb, keeping it very simple, you need 10 grand as your down payment to purchase this home. And then you have part B. A, B, settlement charges, state charges, government, real estate taxes, blah, 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 blah. You're going to need another 5, 6, 7, 8, 9 grand. Ballpark, right? So it gets you an idea of what's needed. And you don't say, well, I'm not going to call Paulie until I have that. Let's get creative. Let's take a look at the blood work. Let's get all of our goals lined up. And maybe it's a 2-month goal. Maybe it's a 6-month. Maybe it's a 9-month. It doesn't matter. The earlier you get engaged with your mental health, your physical health, your financial health, the better off you will be. You will be able to make better decisions moving forward about investments, credit card debt, what the impact is to my scores, et cetera, et cetera. And you never know, there could be family members or friends that would love to help you. And I got news for you. There is grant money. There is grant money. What does grant money mean? Well, when you work with me, you get some grant money. Grant money means this. We will give you approximately, I'm going to work the numbers right now. Here we go. 2699. We'll give you about $8,000. Here's 8 grand because you use my lender. 8 grand. What's the stipulation? All you need to do is make that payment 3 years in a row, 3 years in a row on time, and the 8 grand we gave you disappears. See ya. Didn't have to make a payment. See ya. Gone. There are county grants. There are state grants. There are Fed grants. There are too many grants for me to have them all memorized. The one that I have the most memorized, the one I just shared with you, because it's the easiest. Sometimes the state and the Fed grants say, we'll give you some money, but you got to stay in that house for 5 years and you can't refinance or sell. Otherwise, you got to pay us back in full with interest. I'm not saying that's a bad thing. Not at all. Just understand what you're accepting. So there are circumstances where you could be qualified to get that extra money. And the beauty of the grant I share with you that I have, There is no restriction on income. Most grants have restrictions on income. They don't want to give grant money to someone making 150 grand a year, but they'll give it to somebody making 75. We give it to somebody making 75 or 150 or 500. Doesn't matter. And you don't even have to be a first-time home buyer. You just need to be a home buyer. And you have access to that. I wanted to give you real world numbers so that you can apply it to your life. Don't let me leave with any questions unanswered. I'm here for you.
A question that we always have asked of individuals are about the student loan aspect of being able to qualify for a loan.
Great question. Here's the general gist. We look at the student loan that's on credit, and we have to calculate the monthly payment that is on credit. What I would highly encourage anyone to do and everyone to do after we take a look at credit, allow me to see it before I give you the guidance. I'm just like a doctor. I got to see what's wrong before I write a script. Sometimes applying for an income-based repayment plan brings down the monthly payment on those student loans, and sometimes dramatically. Income-based repayment plan brings the payment down dramatically. Paulie, I'm in a deferment. I'm not paying. So you don't need to count it. Well, yeah, I do. I do. Here's why. The government's not stupid, gang. They don't do anything with our best interest in mind. Keep that in mind. You know that. You know that. Student loans cannot be written off in a bankruptcy. They'll follow you to your grave, gang. I'm not saying that like it's a bad thing, but they set them up for a reason. You wanted to go to school and sign a piece of paper and says, here's the money. Now you got to pay the piper. So the mortgage companies say, even though you're in deferment, even though you're not making a payment, we need to calculate a payment because at some point in time, they're going to want their money. And when you start making that payment, you might not be able to afford the mortgage payment. So we don't want to put you in a position that causes you financial distress. And now you're calling because you got to sell the house you can't afford because the student loan payment is so high. We don't want to see that. I want to help you. Income-based repayment plan, usually the best course of action to get that payment lowered. And just because it's not being paid doesn't mean we as mortgage company professionals don't calculate a number. Typically, it's the balance times 0.5%. So it would bring that payment down, but that would be the factor we'd have to use if there's no payment shown or it's in deferment.
I want to definitely share something. I do see in the chat, we've had a few ask for your blueprint with the cheat sheet. And I know once they schedule a time with you to be the doctor for what it is that they need financially, you will share that with them for sure. I want everybody to know the power of what Paul is sharing is not limited. If you're not ready to purchase right now, Paul is able to help people in all 50 states. So if you loved and enjoyed so much what it is that was shared here, just know that you can extend that love to somebody else who you know needs this assistance as well. Paul did put his contact information in the chat. We also want you to circle back with who invited you to this space as well. And I know they're going to check on you to see how you are doing. But again, this is a partnership. We do work together to help you achieve that goal of home ownership, whether you're selling the purchase or this is your first time purchasing, or you are an investor looking for some creative financing opportunities. Paul is definitely the one that is going to be able to stroke the pen and figure all of that out. We, as the real estate professionals, have the conversation with Paul with that pre-approval letter, letting us know what the comfortable mortgage payment looks like while we're out here shopping to make sure that we keep you focused. We get that safe word together because we know while you're out looking, you're going to be like, oh, a wraparound porch is fully screened in. I didn't even realize I wanted a swimming pool in my kitchen. Oh my gosh, is that a heated ceiling? So while you're looking, there's going to be things that are going to catch your eye. As real estate professionals, we definitely have the conversation with you about things that are needs and things that you want. I want to plant a garden in my backyard. So we are not going to find a home that has trees everywhere because we are sure that expensive cutting down those trees is going to be extensive. We want to keep you focused. You said you wanted to plant a garden. We're not going to say it like that. We have a safe word. This house may not work for that garden that you wanted to plant. Look, you have a bunch of cars. We need to have 12 garages. I'm playing. Plenty of parking spaces for sure. But now we're looking at houses with carports, so making sure that we keep you focused and being great communicators while we have this temporary relationship with you to help you fulfill your goal with home ownership. That is what this foundational piece has been for you and for us. And we are thankful again for allowing us to guide you and be a part of this journey with you. Paul, do you have any last words to share? Then Hakeem, Carmelita?
No, I appreciate everything. I'm lying. You know me, I could talk all damn day. So I will say this from my perspective, always for the agents on here, increasing your performance. I'm a perspective coach. I'm a performance coach. I'm your mortgage coach. Think about this. If you don't change it, you've chosen it. Whether it has something to do with the realtor stuff, whether it has something to do with a home ownership, landlord, you're in control. Do not release your authority to somebody else. You are in control. For me, gang, I always consider the source of where I'm hearing information. And if it doesn't align with my 4 F's, I don't listen to it. Faith, family, finance, fun. They don't have to be yours. They're mine. Faith, family, finance, fun for me. And if somebody's trying to scare me away from my God or my plan or what? Next. I get up. Well, look at me. Look at what I'm doing. I get up and I turn the channel. How old are you, Paulie? Get up and turn the channel? No. That'll give you an idea, right? But I'm like the bouncer to my brain. God gave me this beautiful instrument. Paulie, protect it. I walk around with a clipboard like you're trying to get into the club, Conti Club. You are not going to impact me in a negative manner because I don't permit it. Encourage and power, work with me, love me like I love you. Let's do this together. But if you're trying to tell me something that doesn't line up with my religion, my faith, my faith, I don't have room for you. I don't have room for you. You're in control, gang. We can do this together.
Thank you. Definitely
Thank
the
you.
4 F's, the 4 F's. Christina Nisi Mathis, I see your hand is raised.
Hey, Polly.
Hi,
So speak to my VA loan people. A lot of primetime lenders, great lenders aren't necessarily great with VA loans, and VA loans sometimes have a stigma. So can you give me a 30-second spill on why we should trust you with a VA loan?
Well, if this call didn't do it, then I'm going to have to check out, Christina. I mean, I don't know what to say. All right, so listen, I'm kidding now. So listen, first and foremost, any veterans, thank you, dear Lord, for your service. Absolutely incredible. And from the VA's perspective, we're a direct VA lender. There's no issues at all. There's no stigma attached. We should be bending over backwards for our veterans, whoever we are, what they've done for us. Number one. Number two, they get the exact same service that you're hearing tonight, the same education. The difference is this. There's some powerful tools for our veterans. Number one, no money down purchase, right? That's a piece of cake. That's absolutely fantastic. However, I want you all to recognize there's 2 more things I want to share with you. As a veteran, you have the ability to assume somebody else's loan. Here's an example. I would look at the current person selling their home and ask if they have a VA mortgage that maybe they got 3, 4, 5 years ago that was at 3%. You can assume their mortgage at 3%. You got to cut me out. I'm a mortgage guy. I'm your mortgage guy. Wait a second. I'm doing what's right. If you can assume somebody's mortgage at 3%, walk right into their payment, let's go. That's absolutely fantastic. I love that. Second tip for you. Any home that needs a little love, little hug. How about for some of our disabled veterans that might need a ramp built, that might need rails put in the bathroom, that might need accommodations built into this home? You know what you can do? You can do a VA rehab purchase loan. You can build in the rehab for that purchase into the loan and still take nothing out of your pocket. That house needs $20,000 worth of renovation to accommodate me. Folks, you might not be disabled, and it might not be to accommodate someone that is disabled, but I've done this many times before. Roll all of the rehab into the loan. You might just look at that house and say, daggone, didn't they want to change a toilet in 50 years? Not a toilet, not a countertop? What in the hell's going on with these? How do you live like this? I want a new kitchen. I want new countertops. The bathroom, come on. That's $30,000 for that. I don't have the 30 grand. Don't worry about it. We'll put it in the loan. You don't take a nickel out of your pocket. We build the veteran loan. We build all the rehab into the loan so that the veteran gets to move in to a totally renovated house, to the specs they wanted, to the accommodations they wanted. How beautiful is that? So if I'm an agent on this call, you know what I'm doing? Every time I talk to a seller, you got a VA loan? Okay. So maybe we have an assumption or not. And how long has this house been in the condition it's been in? I'm trying to be polite, but it looks like a turd. So how long has the house been in this? Maybe we can help it. So, hey, that house been sitting on the market for 120 days and it needs a little bit of work. It needs some love. It needs a hug. And my veteran would love to do the work to that house. Well, you come and see Paulie because I got the VA rehab loan. Come on, gang. The combination of what? That's live for you right there. That's live. This combination, your team, your agent and Paulie, you need the right team, gang. You need the right team. And I hope I honored my word in providing a perspective, a little bit of performance, and educating and empowering you to achieve you want to achieve. Christina, I'm almost afraid to ask. Did I do enough to earn that opportunity?
Yes, sir. Thank you, sir. I appreciate you.
Man, that was close. I was sweating. Now, the lights in here, I was like, man, she put me on a spot.
The visual picture that you paint, Polly, is so necessary to help put us in the space that you're in. Thank you. Hakeem?
Paulie, thank you so much. Like, you share a wealth of knowledge and just gem after gem after gem. So I definitely appreciate you. This home buyers seminar is extremely important. I love the fact that you touched on so much, from control to timing. You know, being that it is a buyer's market, a lot of people are sitting on the sidelines, not realizing this is the best time to buy. You know, you have the most negotiating power right now, more than in the last 6+ years. Right now, you will have, as the buyer, the most power in purchasing right now. So take advantage of this opportunity. We have all of the real estate professionals, we have the mortgage professionals, we have exactly what you need here. And I encourage you, if you're a home buyer on this call, definitely get with the individual who invited you, but make sure to tell someone, tell a family member, tell a coworker, tell other individuals, because it's sort of like when you're in a home buying spirit, you're talking to everyone about it, and lo and behold, you're talking to 3 or 4 other people who are thinking of buying a home. So share this knowledge, share this information, and share the resources you have. So thank you.
Thank you, King. Appreciate that.
Thank you. Carmelita?
If you want that cheat sheet, don't forget, you got to text me. Tell me where you came from. We'll talk for a minute. I'll get your email and I will send you the cheat sheet. I will not harass you. I will just send you.
Thank you, Paul.
Yes, yes, yes. Everything is just amazing. I think each time we come together in this space, it elevates. And if I can just offer one thing, Hakeem said it best. I was going to say, tell a friend to tell a friend to tell another friend to come to the room and plug in and get the knowledge. And to all of our partners, our realtor partners, Guys, keep going. We are change makers. We can help individuals make differences. They may not be ready to get off the sidelines yet, but as Paulie says, it's never a no. It's just a matter of when. When you decide you want to get in the game, I'll put you in the game and I'll give you the ball and let you run the play.
Coach.
I love sports, so I always have a sports analogy. But
Yes, we had a home buyer seminar around basketball one year because Carmelita was, we had our jerseys on. So Corey actually put in the chat that this was powerful. Paul, you are very knowledgeable. Just in case you didn't know, we got somebody in the room sharing that as well. And we will be here again on the 21st. So if you have somebody that you feel like missed out and you know that you can't share the sentiment and the energy that was shared in the room like you can be being in the room, then you're just going to share the same link that you used today to be a part of this conversation. If everybody can please unmute and celebrate the energy that we have shared today together, I would love it before we go.
Yay, awesome.
Yes.
Awesome.
Thank you.
Yeah.
Thank you so much,
Great
everybody.
job,
Thank
everyone.
you.
It's awesome. Thank you so much.
I want my keys. Give me my keys, please.
Ollie, I'm not a real estate agent, but you certainly cut away a lot of apprehension for my wife and I. And we really appreciate you. And thank you so much.
Thank you very much. I appreciate that. I usually do my best to, I'm sorry, I didn't mean to cut you off.
I was invited by Christina, so thank you so much.
I look forward to helping you, my friend. Thank you very much for that comment. You just made my day. My hair's standing on end. I usually do my best, as we all probably do, to reserve Sunday for God and to take it a little bit late and hang out with the family. But then God said, Paulie, there's 20 people that want to talk to you today. You need to get on a Zoom call.
Yeah.
And then you just made that nice comment along with some other beautiful comments. So thank you very much.
You're welcome.
Thank you.
Corey, I heard you unmute. Did you want to say something?
Great information. I was over here taking notes. I just wanted to say, thank you for inviting me to the live.
And who invited you, Corey?
You, we spoke on text.
Thank you.
I work with ADT as well.
Mm-hmm.
Anybody is interested in getting plugged in with ADT for a home, you can contact me if you like. I actually offer a wide range of promotions, same plans as corporate ADT, except there's bonuses going through me. So what I'll do, I'll drop a link to my business card in the chat. But that's we service all 50 states, all 44 states. Let me correct that. But I was just soaking up all the information from Paul. Man, it's great information. What about HELOCs? That's one question I can ask.
So a HELOC is a home equity line of credit. It's essentially a second mortgage. If you don't have a first mortgage, it becomes a first mortgage. It just stands in position. And a HELOC essentially is looking at what the balance of the mortgage currently is and what the value of the home is. And does
that work with grants and everything that you mentioned?
No, the grant is for a purchase. The HELOC is for someone that already owns a home. That's why it's called a home equity line of credit. Home equity line of credit. I do those as well. And that would be for someone, for the sake of example, Corey, you may have bought a home 4 or 5 years ago and got 3%. And you want access to the equity, meaning here's the balance of my mortgage. Here's the value of my house. See all that right there? Can I grab that? Yes.
Yeah.
In a home equity line of credit, you can grab that money and take me to dinner. I mean, you can buy another property. You can buy a car. You can invest in a business. You can do all those things. You can grab that extra money with a HELOC. I offer those as well.
Awesome. Okay.
Corey, you should be reaching out to me, brother. You had some nice comments and a good question. And I like the ADT background.
I locked your number and I'll send you a text.
Yes, sir. Great to meet you, my friend.
Perfect. Ashley? Ashley, I don't know if
No,
you
just
muted on purpose.
yeah, no, I was just gonna say love it, love it. Thank you, Paul. This has been so many gems dropped. It's just been amazing.
Thank you, Ashley.
Mm-hmm. All right, everybody. Well, we all have homework. Please reach out to who invited you and those who invited people that missed it. Make sure that you plug back in with them. This will also be live on YouTube University. So once we get it up, we will share the link with you. Everyone have a wonderful rest of your Sunday fun day, and we will see you on the next time. Looking forward to the invitation to your housewarming party.